What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is February 20th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to approach a very important question, but do so in a very rational way, and that is the question of whether or not the coronavirus, or COVID-19, as it's being referred to as, is severe enough to spark a global recession. And I think this is a very fair question, but it tends to be that when people go about answering it, they tend to have one of two extremes. They either say that, oh, it's not going to have any effect in the economy, it's being completely blown out of proportion, and it's having no effect on the global economy whatsoever, and it would never spark a recession. But then there's also those on the other end who say that this is going to spark a global pandemic, a recession, the likes we've never seen before, and that it's going to kill millions of people, and this and that, and yada yada, whatever, right? And it tends to be that those two extremes are never right, and somewhere it lies in the middle, the correct answer. And I think that today's position that I'm going to present forward could be that answer, or something that's at least much more rational and close to that objective reality. All right. But before we dive into that, before we dive into the data on this very interesting question, I want to go ahead and let you all know that this video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform that allows you to interact with a wide range of traders from across the globe, and they just recently launched their copy trader feature for US traders in the cryptocurrency space, where you can buy a wide range of cryptocurrencies at the click of a button alongside some of your favorite traders, including people like myself. So you could go to, example, this individual, you can check out their stats here, you can check out their portfolio, their current holdings, and if you like what you see, if you believe you want to trade alongside them, simply hit the blue copy trader button and you'll be trading alongside them real time at the exact same prices. So if you're interested, check out the link down below in the description. All right, so let's go ahead and talk about the coronavirus itself, because if we're going to go about answering this question, we need to understand to a decent degree the severity of the coronavirus. And again, you'll tend to find people on one end of the spectrum. They'll say that this is nothing compared to things like the flu, or that, you know, this is just something so small comparative to what the media is blowing it out to be. And then there's also people on the other end who think this is the next global pandemic, that this is the next bird flu, that it's going to kill millions of people in the process, that we should be absolutely just going bonkers over, you know, what's been going on in China and the spread of this virus. And I'm going to go ahead and present a very moderate view, saying the pros and cons here, right? Let's go ahead and talk about the good here. And I'm going to make it very clear, this is not going to be a global pandemic, guys. I want to go ahead and just kind of kill off the very fearful view here. At the end of the day, guys, the growth here, yes, has been definitely growing at a decent pace here. And the other day as well, we had a spike up in the amount of cases because China had readjusted the way it goes about detecting the symptoms of the virus in this case and diagnosing you for having the coronavirus or COVID. So because of that, that's why we had this spike here. But nearly afterwards, we've actually been having relatively stagnant growth here. In fact, again, I know a lot of you out there don't believe the numbers out of China, and heck, I don't really believe them either in a lot of degrees. So the way that we actually have to go about understanding how severe this is taking a look at other countries. And if you take a look at some of the big countries like the United States or Australia or Germany, or even some of the Asian counterparts here from Thailand to Taiwan to Hong Kong and Japan, the growth has been relatively slow. In fact, in many cases, like the United States, it's been stagnant. We haven't had many new cases in the past week, and if anything, we've added one. So we're taking very severe precautions here. It might be a continued problem here in China, but not only is China taking massive measures to try to reduce the spread of it. In fact, if you're actually detected for having the virus, you have to stay in your home for up to 2 weeks to make sure, in this case, if you show any sign of symptoms for the coronavirus. But along with that as well, they have taken excessive precaution not only in China, but in a variety of other countries and World Health Organizations across the globe. So again, this is not going to be a pandemic, in my opinion, even with the virality of the coronavirus. Plus, the death count is nowhere near what it was for things like SARS, right? So taking that into mind here, right, we probably know it's not going to be the doomsday scenario. If you're looking for my, not only my opinion, guys, but really what the data is saying right now, it's very clear right now that this is not going to be as severe as people originally thought it might have been. But it's not to say that it's not having an effect on anything. To take a more moderate view and to kill off the, oh, this is nothing, you know, this is not having any effect on anything kind of view. To be very clear, guys, this has frozen China's economy. This has frozen the global economy in many ways for imports and exports. And for a lot of countries, a lot of companies that are manufacturing their goods and services in China, like Apple, Apple, for example, has had to massively reduce its production at Foxconn and a lot of its major manufacturers and part component manufacturers. So all of the different kind of parts and little parts of the invisible hand that make up the iPhone that you use or the MacBook that you use are having to shut down their operations. They've been having to do that for a long period of time, off and on. And this has started to spark a huge issue for the global supply chain. It has started to cut down on the available supply of new phones here in this case, and also on the demand side as well. People in China, as well as the United States and other countries across the world, are not consuming as much this previous quarter, right? This has really sparked a huge issue for global consumption and also production. And if we take a look at the data here, this is something that we need to be concerned about. Now, the major component here to summarize the issue that the coronavirus might spark is an issue in global corporate earnings. This was a post back in near December 30th of 2019 from this lady named Samantha Leduc. So basically, Samantha is a Twitter personality and stuff who does a lot of interesting chart analysis, a lot of data analysis within traditional markets. And she'd already recorded something that's very significant. Back in the previous quarter, back in 2019, we saw the first decline in corporate earnings that we've seen since back here in 2015, and before that it was 2008. Now, when we see this decline in corporate earnings, we tend to find a severe pullback in equities. Now, there's a reason for this. There's a very, very clear reason here that we should be concerned about corporate earnings, because if you guys have been keeping up with the channel, we know that corporate earnings are what increase stock buybacks, where companies take available cash on their balance sheet and repurchase their shares. And along with that, it stops dividends, which have both been very much the reason why equities have been going up. $5 trillion since 2008. Actually, no, sorry, I think it's around $6 trillion now that has been injected to prop up equities through stock buybacks, and the countless amounts of trillions of dollars in dividends that have been injected on basically over the last decade. All of these have provided immense buy-side pressure for equities. And if there's a decline in corporate earnings, if there's a decline in the available amount of cash that a company has, or companies as a whole have on a quarterly basis, that's going to mean less stock buybacks. It's going to mean declining dividends. It's going to mean that there's less buy-side pressure to meet against the sell-side pressure on markets where people are taking profits at these record high levels, right? So let's just go ahead and talk about, the kind of key issues here, right? We already know that in this case, this could cause an issue for major companies like Apple. Apple's a really good kind of test bed just to kind of get an understanding of the current situation, or they're a good example in this case, a poster child. We can see here that Apple has already come forward and said because of the coronavirus, they did this actually on President's Day when the market wasn't trading, and they stated that they're going to have a decline in earnings. And I don't think this comes as a surprise. This is understandable. But Apple's made it very clear from the get-go that this is not, it's not going to be possible for them to meet their corporate earnings this quarter. But you have to understand as well that there's a big underlying issue for this tech company. For example, the general decline in smartphones that has already been prevalent since 2016, where we were selling internationally, 1.47 billion smartphones globally on an annual basis. That has now gone down to 1 billion. So you're already in an environment where your flagship product is seeing a decline, right? The general market that you're in. The general global sales in China, one of your biggest markets here, is already on the decline. And iPhone sales have again been outside of their seasonal range, where they've been basically holding around their peak range back here in 2015, have been seeing what might look like the start of a decline here. And also Apple's net income is a good reflection of this, right? We're starting to stagnate here. And if we get a severe enough drop here where we start to see corporate earnings decline to something like 50 billion, 45 billion, 30 billion, whatever it may be in net income, that's going to be very concerning, right? I don't know if we're going to see that severe of a correction, and I don't think it might be reflected right away. But the major thing to take note of here is that if Apple's corporate earnings dropped from, say, $55 billion to something like $30 billion, right? If we start to see those severe drops in net income, right, it might not seem as disastrous for the company, but it will be for its share price, because Apple has engaged in a $100 billion share buyback program. It has been one of the biggest buyers of its own shares. And because of that, if the net income declines, they have less available free cash in this case to inject into stock buybacks. And as the valuation of a stock gets larger and the price of the shares get bigger, they're having to spend more and more cash to just keep it afloat against the sell side pressure, right? So that's the thing to keep in mind here, guys. And This is the full-blown chart here. This is what you have to keep in mind here, the general decline in corporate earnings. If we see this happen to enough companies, if we see stock buybacks, if we see share dividends that have been the only reason stocks are up, it is the only reason outside of maybe a few retail investors speculating on the market. Institutions are net sellers. They're not holding or buying into equities. They're continuing to decline their exposure. The only thing that's continuing to prop this up is companies' cash coming in and buying up shares on the market, or buying, basically paying out higher dividends, or people are doing DRIP programs, dividend reinvestment programs. So again, this is the key thing to take into mind here. And Samantha's been talking about this. She actually put a tweet out the other day saying, she was referencing to a tweet here from Joe from CNBC, where it basically showcased the general decline here in car sales, right back in the recording we got here, the most recent numbers in February. So car sales in Europe down 7.4%, in France down 13.4%, Germany 7.3%, and Spain at 7.6%. And she pointed out this is before COVID-19. What's going to happen now when the global supply chain is frozen? What are the numbers going to look like in this case? And when consumers are not purchasing as fast as they were in the previous quarters? It's not going to spell good for global markets, in my opinion. And that's where we reach into a very middle view here. So to answer the question, could this cause a recession? Very much so. It could very well be one of the first initial dominoes that start to pull back the global economy and therefore pull back equity markets as a whole. And I'd like to know what you guys think about this. Again, it's just a general kind of analysis here. We're already in an environment that's already pretty fragile globally in the sense of the global economy and global production and manufacturing. And now we have this element coming into play. And then what will it lead to next? If it starts to pull back corporate earnings and pull back stock prices, what other things will it trigger in that case? That's the important question, I think, to ask for a more kind of full-fledged answer in this case. Is there other things that could be sparked after the coronavirus spreads? And I'd like to know what you all think about this. If you agree or disagree, you guys might have one of those more extreme views that I'd kind of criticized in a sense. And I don't mean that to be rude to you guys. If you do hold those views, that's completely fine. But I'll tell you, history tends to show that extreme views in this case and these kind of takes on issues tend to be wrong, and they tend to be over-exaggerated on one end or the other to meet our personal biases. We have to have something that's a little bit more rational and down the middle to get a really good analysis on what really is happening on the global scale. All right? Anyways, hope you all are doing well wherever you are. Thank you all so much for watching, and I'll see you all in the next video. Stay tuned.